In this video, I'm going to quickly show you how to pay yourself as an S-Corp. So if you don't know who I am, my name is Dylan. I own a CFO and accounting firm where we're servicing just around 30 clients right now. And we work with business owners just like you every single day. And funny enough, 80 to 90% of our clients actually are S-Corps. So how do you pay yourself as an S-Corp? You pay yourself two ways. The first is through a shareholder's distribution, and the other way is through W-2 salary payment. So for the shareholder distribution, this is simply a bank transfer from your business bank account to your personal bank account. Now, one thing you should be aware of is there's multiple shareholders of the S-Corp. So say you and your buddy owe 50%, then the shareholder distributions and contributions need to be exactly the same in proportion to the ownership percentage. So if you distribute, $5,000 a month to this person, then you need to distribute $5,000 a month to the other partner as well. And if they're uneven throughout the year, that's okay. But by the end of the tax year on the books, they should be even in proportion to the percentages. So in 1 year, if one partner got $50,000 distributed, then the other partner should also have $50,000 distributed. Now, the other way to pay yourself is through W-2 salary, and this should be actually ran through payroll, and you should be paying payroll taxes on those payrolls when they're initiated. W-2 salaries don't have to be in exact proportion to the ownership percentage the way that shareholder distributions do. Now, one thing that's cool about the salary is I'm sure you've heard that you need to be making quarterly estimated tax payments, but you can actually pay in those federal and state taxes throughout the year through your W-2 salary. So the same way that at a W-2 job, like if you were an employee, you would have federal taxes taken out of your paycheck. You could do the same thing here as an S-Corp owner. You can actually pick how much you have withheld. We have some clients that they pay themselves an $8,000 salary, but they withhold $6,000 of it, to mitigate having to pay a huge amount of taxes come tax time. So you can make that adjustment however you'd like. And it actually counts as paying in those quarterly payments. You won't get penalized as long as you're paying enough in based on your prior tax return. One other thing to keep in mind with the shareholder distributions is you can't take distributions in excess of your basis. Otherwise, the distributions become taxable. And if you don't know what I mean when I say basis, you should probably ask your accountant, or you should probably be working with one. Now, S-Corps are great for mitigating self-employment taxes. Make sure that W-2 salary is a reasonable wage. If you have a business that's making millions and you're distributing hundreds of thousands of dollars and try to do a $30,000 or $40,000 W-2 salary, that's not going to look great. So make sure that W-2 salary is reasonable. Your accountant can also help you with that part. But yeah, those are the two ways. Shareholder distributions, simply a bank transfer from the business account to the personal account. W-2 salary should be ran through a payroll processor like, QuickBooks or Gusto, Paychex, ADP, one of those things. Hope you got some value out of this. Go ahead, like, subscribe, and we'll keep bringing you great accounting content.